What is up, guys? Dirk here. In today's video, I want to break down Bitcoin's price action over the last, say, 24 hours or so, where we had a crazy wild pump from 27 to almost 30,000. Now we're still hovering around 29,000. And in this specific video, I actually want to break down for you how you could have traded this, how I was able to predict this ahead of time. I will show you the before and the after. It's all time-stamped. And then show you my reasoning behind that, how I was able to predict that, so that you can use that same strategy going forward, and hopefully it can help you, make better entries and exits and avoid getting tricked, because this manipulation, what you see where these prices shoot up and down like this, $1,000 or $2,000 in a day and then back down, it traps a lot of retail traders. But it is actually fairly predictable if you understand what is happening, and then you can avoid being on the wrong side of it and actually position yourself for the right side of it, so that you can be the one who's profiting rather than getting wrecked. Alright, so before we dive into that, just a quick little reminder for this week only, the next couple days, my intelligent trading course that I've just launched is still at a 50% discount. The price goes up next week, so if you want to learn from me, you want to learn all this technical analysis, click the link in the description down below. It's all explained there what you get. There's a 60-day money-back guarantee, so you can go through everything. If you're not happy, you can get a full refund, but the price doubles next week. So if you want to lock in that discount and then put that towards your trading capital, that would be a better idea in my opinion. So click the link in the description down below and go check that out. Sign up if you haven't done so already. Okay, so what we have here, you can see Bitcoin is at 29,000, and we're talking specifically about this move over here. This is a 1 hour chart. You can see how it went from about 27 to 30,000. At this point, a lot of people were betting that it was going to break down. So what happens? It liquidates people, and then at this point, everyone starts to FOMO in. They were liquidated, and they bet, oh, we're going to a continuation. And then what does it do? It goes back down, and it double liquidates people. Some people got double or triple or 10x wrecked here. And it's sad to see, of course, but this is a very explainable and very predictable, and that's what I'm going to try and attempt to do here in this video. So if you like this content, smash the like button, subscribe, and let's continue. Okay, so quick lesson. The markets, the price action here, all these ups and downs. First of all, any chart, all it can do is go up, down, or sideways. Okay, those are the only possibilities that it has. But it is in the interest of the entities behind this. You want to call them market makers, you want to call them big whales, you want to call them maybe the exchanges. It's in their interest to constantly bait retail traders, you and me, who's trading this on a Bybit account. I have a link in the description also. If you use my link, you get good bonuses and you get maximum benefits and stuff. So sign up on Bybit if you want to do that. But retail traders like you and me, to bait them into taking high leverage positions and then trapping them and liquidating them. So what it constantly is trying to do, if you think about price action in this way, it is constantly trying to trap people into taking a long position at the top, and then it traps them, it baits them, and it drops, and it liquidates them. And the same thing to the bottom, okay? It traps people into thinking that it's going to go down, and it goes up, and it liquidates them. Because retail traders, by doing that, they consistently not only run up fees on the exchanges, which of course the exchanges profit from, but they also get liquidated, and obviously that's in the benefit of the market makers who take the positions against the retail and who are actually profiting from this. So without getting too deep into all of that, just see the markets as a constant game. If you want to think of it like that, think of it as a video game where the objective is always to trap retail traders, and they do that by working on emotions, because most people do not spend as much time learning about price action and about these charts and markets. So most people are emotional, and they react and they make their trades based on emotions. So like any human being, we're very vulnerable to those emotions of fear and greed. So what these markets do is they keep moving higher, the markup phase, they keep moving higher until you get this feeling of FOMO, right? And usually by the time the feeling of FOMO is the strongest, where you really feel, okay, this market has gone up so much, it looks strong, and now I'm going to take a position going long because it's just going to continue going up. That is usually near the top. And when you feel the opposite, when the market has dropped and you miss the ride and you think, oh, now it's about to break down, that's usually when your FOMO of taking a short position and wanting to sell is the strongest. And then it usually always does the opposite. Okay, so just purely by thinking of markets in this way and monitoring your own emotions, how you feel when the price has done certain things, you can dramatically increase and improve your results from trading and from investing. Whether you're day trading with leverage or whether you're just investing with buy and spot and you do a position once a year, right? Same thing, around about the time when the FTX exchange collapsed, we had a year of bear market, there was so much FUD, and at that point, that was baiting people into selling almost the very bottom, and look what it did since then. Bitcoin has almost doubled, right? So these principles work on higher time frames, they also work on lower time frames. So purely change your approach to thinking about the markets in that way for day trading and swing trading or whatever you're investing or trading with, and it'll help you think in an opposite way. So if you don't want to be looking for shorts after it's had a long move down, okay? You wait for a bounce back and then you short up here. In the same way, you don't want to be looking for longs after it's already made such a move. You want to be looking for longs after it's been dropping, okay? That is basically a very simple trick to help you get better results from trading these markets, okay? So with that in mind, now let's just look at the setup and why this was fairly predictable. So this is that same price action, and this is the prediction that I made when we're over here. You can see the price at the time was 27,300. You can see the timestamp at the top here. This is with TradingView, so this was published ahead of time. This is not some hindsight analysis where I'm breaking it down in theory. This is literally what I said before the time. This was the squiggle that I thought was going to happen. Okay, so we had this drop. Then I was expecting a move back up and then a continuation to the downside. I will explain my reasoning in a second. I can break it down a little bit here. You can already see. So what we have is a diagonal. When the bullish trend up here breaks the diagonal to the downside, it usually means a lot of people are viewing this as, hey, the trend is broken, which it has, and they're expecting continuation to the downside, which usually we get. But at this point, since it's already dropped, the diagonal is broken, a lot of people are looking at it this way, and they're thinking, okay, I'm going to take a lot of short positions here because it's going lower. And most of the time, it does actually end up going lower a lot of the time. But because everyone's taking these positions here, the market doesn't want to make it easy for those people and give them free money. Again, like I said earlier, the market's objective is to bait people into taking positions, trap them there, then liquidate them, and rinse and repeat as often as possible. So what they're doing here, this is bait, okay? Bait to take short positions. A lot of people are taking high leverage short positions at this level, expecting it to break down, easy peasy, and then what happens? We get this major pump. And technically, what happens here, and this is a pattern that I've just observed over and over, is we often get a retest of the diagonal, which is then in confluence with the Fibonacci golden pocket if you put a retracement on this move. And that is why this was the idea behind the trade. So we broke down here. It's too easy to just keep going. I mean, sometimes it can, of course. It's never 100% certainty. It's all about probabilities. But think again about the objective in being able to trap people and liquidate them. If it just goes in one direction in one straight line, it's too easy. So that's why there's all these chop and all these moves to continuously trap people, bait them, trap them, liquidate them, okay? So this was the idea. We get a move back up here. It liquidates the shorts. And at this point, without seeing it like this, of course, people are going to think, oh, the bull market is back on. It's going to continue higher, which, I mean, sometimes it can. But then if it drops back down, the people who longed here at the top, they also get liquidated again. Again, keep in mind, objective being to bait, trap, and liquidate people. So sometimes, yes, it can continue going higher. That is why with trades, and this is a setup, so the entry would be over here. You can see where the gray level is. The stop loss, you need a stop loss. You need to know at some point when you're wrong. So in case this doesn't play out in this way, and if I'm wrong and it continues going higher, if it goes past this previous high, in my opinion, the trade is invalid and it could continue a lot higher. So I'm betting on the fact that this trade setup is correct. If I'm wrong, I'm going to take a 1% loss when I'm wrong here at the high. But when I'm right and I'm targeting these lows, you know, I could potentially make 3, 4, 5x the money that I'm putting in. So, you know, if you're risking 1%, you make 3, 4, 5% on your account from a single trade. And this is really just how to go about it as professionally as possible and how to manage your risk as best as possible, following a proven system. You know, I've tried this, I've tested it, I know it works for me a lot of the time. So I'm okay with taking this setup. And again, because the risk reward is, say, at least 1 to 3, it means I only need to be right 1 out of 3 times to be able to still be profitable. If this setup works 2 or 3 out of 3 times, I'm profitable. And if it's more than 1 to 3, I'm very profitable. Okay, so that is just how to approach it from a systemized way to manage risk as best as possible. Okay, so there were two possibilities here for the setup. I just want to show you here again that I did publish this in advance. Again, this is not some hindsight analysis. You can see here, look at the timestamp, April 25th, when the price was here. This was the setup that I was looking for, a drop here and into this high. So let's break down this setup a little bit more so you can understand why I did this. Okay, so first of all, the larger picture reasoning, which I just showed you, that I thought we could get a squeeze to the diagonal retest, meaning that I thought we could get up there. So if it was going back up there, I think, okay, well, might as well try and take a trade to ride it to the upside. Okay, the reasoning behind being able to take that entry is that this was possibly demand over here. We dropped all the way from 31 all the way down here. And you can see we didn't drop below 50% of the demand over here. So this is a potential setup for a long. Okay, so what I did over here is after this drop here, put the Fibonacci retracement here. And my idea was basically just I want to look for a long on a retest after this move, retest over here. And then my stop is at the bottom of the potential demand over here. If it goes below there, it can probably go a lot lower. So my risk is I'm risking 1% if I'm wrong on this idea. And the target is simply that same thing that I showed you a little bit earlier with the idea it was going up. It's the Fibonacci golden pocket retracement over here in combination with a fair value gap. You can see this imbalance over here where it dropped through it. It usually comes back to fill it. So there's that confluence. There's actually also the diagonal over there. So the target, I put it just shy of that, so not to be too greedy. And you can see that is exactly what happened. So this was this move down. A lot of people were targeting the breakdown, thinking, you know, it's going to go a lot lower from here. And it could very well still do that. We could still get that continuation to the downside. But people were betting on it over here. We got the squeeze. They all got liquidated. At this point, people were betting to the upside. They think, okay, now we're going up because it was such a strong move also, right? It happened in a day. So we went from 27 to over 29,000. And then people are like, okay, Bitcoin bull is back, massive pump. Let me get in on this. And then they FOMO towards the very top here before it pulls all the way back down. You can see, so it dropped all the way back down. And that was also a short setup. So let's move on to that one. So you can see this looks familiar because it is the exact one that I shared with you before the time with the exact drawing that I had before the time. Remember, I published this before the price action happened. So we can see over here, this is pretty much exactly what happened. We went right there to the Fibonacci golden pocket. It has confluence over here. It didn't quite touch it. I guess it depends a little bit how you draw it. I mean, you could put it like this and then it probably did touch it, right? So we have this confluence here where it's very close to retesting the diagonal, but most importantly, it's confluence with this fair value gap and the Fibonacci golden pocket. So that is the run to the upside that we were able to predict in advance and trade. And then this was the short entry that I predicted in advance once again because of this setup. So at this point, it could have gotten an entry. The stop is over here above the high because if it continues past that high, it's probably going a bunch higher. So I risk 1% when I'm wrong over here if the idea is wrong and it continues higher. But if I'm right, which I mean I already had over here to the downside, there was already a 2R that was possible, meaning 1R when you're wrong, could have already made 2% and closed it over here if I was watching at the time or I wanted to be conservative or anything like that. Okay, so this trade idea, it went up first and it came back down like I was saying here, and it has bounced back up in the same way here. The blue line is obviously over a bit of a longer time frame. It happened a lot quicker than I thought, but the pattern, the idea, the levels and the moves are all very, very similar to how it actually ended up playing out. So now we're going to have to wait and see. Of course, I don't know for sure. Is it going to continue moving down? That is my expectation based on the setup. But of course, it is not a 100% certainty thing. It could end up continuing going higher and go through the stop, which would mean a 1R loss if I was holding that position that long. At this point, obviously, I've already taken some profits off the table. So there's basically no risk for me. And the idea here is really just to show you that it's possible to predict this in advance when you start studying and understanding how these markets work. They work according to a system. Again, keep in mind, the easiest way for me to teach you this is, again, the markets are just a video game where the retail investor is designed to lose if they don't understand the rules of the game. So what it does is it tries and baits you based on emotions to take a position at the very worst unfavorable spot, and then it reverses back up to liquidate you, and it just does that over and over. So think like that and basically do the opposite of what it feels like you should be doing. When you feel massive FOMO of buying, you're probably near the top. When you feel massive fear that it's just going to absolutely collapse, you're probably near a bottom. Now, based on top of that, if you study the concepts and you use things like these Fibonacci golden pockets, fair value gaps, if you use this setup, this is a very nice setup I like for shorts, with the diagonal, once it breaks below, retest of the diagonal and confluence with the Fibonacci golden pocket and continuation, it gives you good entries. So basically, if you understand this and then you apply proper risk management, like what I'm saying, you risk 1% when you're wrong and you make 3, 4, 5% when you're right, it gives you a good chance of really being able to continuously be profitable from these markets if you follow that system and you stick to that risk management, of course. So if you enjoyed this video, smash the like button. All of this and much more I teach inside my course, the Intelligent Trading course, which is currently at a 50% discount for the next couple days only. So if you click the link in the description down below, you'll be able to sign up, you'll be able to go through all of that training, and there's literally more than 40, I think about 50 video lessons and trainings breaking down all these concepts, how to trade, which platforms to use, how to analyze the charts, and so on and so forth. So if you enjoyed this video and you found it informative and eye-opening, the course will absolutely blow your mind. And like I said, 60-day money-back guarantee on it. So you can go through the whole course. I don't hold anything back. You get instant access to it when you sign up. And if you change your mind or you don't want to keep it, let me know within 60 days. You get a full refund. This is literally, you won't find a deal like this anywhere else. And it is literally 50% off for the next couple days only. So click the link down in the description below, sign up, and then you have 60 days to go through it and decide if you want to keep it or not. Thanks for watching. I will see you in the next video.